Welcome to Diamond Hands Podcast, a TDR podcast for the week of September 13th, the division of the Dales Media Group. I'm your host, Shad Dales. Before we get into this week's podcast, a reminder, all views on the Diamond Hands Podcast are the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or our guests as investment advice. The views on this podcast are solely intended to be informational and are not investment advice. Joining me, as usual, is the lead financial writer of the Dales Report, Benjamin A. Smith. Benjamin, how are you?
Doing well, Shad. Yourself, how are you this week?
I am good. Busy week, to say the least. Things are starting to come to fruition a little bit as far as business-wise. People are starting to get busier, but yet the market's still not coming to fruition. I know this is going to take a little bit of time, but as we look at the psychedelic space and we begin with that, fairly quiet week again on the news front. The market is still searching for a catalyst for the investors to get excited about. The market is generally dipping lower, apart from a sporadic pocket of strength in different issues. So what's your take on this week's performance, and what's your overall sentiment towards the industry?
Yeah, my take is just really a lack of catalyzing news in the industry overall. I think that's what's leading to more of a drip down in selling in some of these issues, right? It's really just as simple as that. You don't need to overanalyze it. The market is just in wait and see mode. It's early stage, so it's very, very news driven at this stage. And there's this, we have those individual news cycles are happening in some of these stocks, but they're not something that's very catalyzing. It's not something that's going to galvanize people to go out and buy. And we saw some, softness in the broad market to start the week and also to finish off the week. And the market just never responded, right? The buyers just simply didn't show up. And right now, we're at the mercy of sort of a catalyzing event that needs to happen to really get things moving again, I think.
Yeah. Well, one of the bright spots, AdvisorShares launched a new psychedelic ETF, trades on the New York Stock Exchange, start trading earlier this week on Thursday under the ticker symbol PSIL. This is notable since they operate the most popular cannabis ETF in the sector, MSOS. We're looking to see whether it separates itself from the Horizons and the Defiant psychedelic ETFs. So far, not much evidence, clearly, as it just only had 2 trading days. But what do you expect? Like, what does this mean, I guess, for the industry, knowing that we're starting to get some American attention now?
Yeah, I think this long term is going to be good. Obviously they think high enough of the industry's potential to launch its own ETF, which is good. And they have the most popular U.S. cannabis ETF on the market, MSOS, which is the benchmark ETF that all investors follow. So I do think there's a good chance that this could become the benchmark going forward. Now,
why?
Well, it's just the way they structure their ETFs, right? They, in my experience, they tend to, like what they did with MSOs, if they follow that model, then they're going to go top heavy. They're going to include some of the issues that everybody follows and maybe be less inclusive of more of the smaller names that are liquid, that could hold some of the issues back and make it less appetizing for investors. So they're going to, investors are going to be exposed to the biggest companies, the ones with the biggest followings, and that seems to be their model, to concentrate on the biggest and best companies in the sector.
Well, let's find out who those companies are. As this week we actually bring in Dan Ahrens, Managing Director of AdvisorShares, to learn more about this ETF, and he is on our featured Spotlight of the Week, Guest of the Week of the Diamond Hands podcast. All right, Dan Ahrens, Managing Director from AdvisorShares, is now featured on our Guest of the Week segment of our podcast. Dan, great to have you on in the podcast.
Thanks for having me on. I'm looking forward to it.
Yeah, the main reason why we wanted to get you on was because of your firm, AdvisorShares, has started a new psychedelic ETF, which began trading this past Thursday on the New York Stock Exchange. The psychedelic ETF trades under the ticker symbol PSIL and is a cousin to your firm's popular MSOS ETF, which is considered the benchmark of the cannabis industry. So before we get into the specifics of who was included and how do you determine all that, I want to get a consensus. From your conversations that you have amongst your colleagues at the firm, how big can this industry get? Like, do we see it surpassing cannabis one day?
I don't know about surpassing cannabis, but also psychedelics right now might be a little bit like cannabis back in 2018. There was a lot of small stocks just getting started in its infancy. And heck, I think cannabis is still in the first inning of what we're going to see in the future. But psychedelics, very new, just getting started. We're excited about it.
Yeah. Ben, you wanted to ask a couple questions?
Yeah, I had a couple of questions pertaining to the market, state of the market right now. And, let's face it, it's been a rough period for many stocks in the psychedelic sector. Many are trading at their year-to-date lows right now. And some of your competitor ETFs out there are kind of struggling along with lower volumes, and it's keeping some of the active investors away. So from your point of view, is it a good time to invest right now with equity values kind of on the low end, or do you look for more, are you worried more about illiquidity in the market in terms of active participation and getting those volumes?
Sure, good questions. And first of all, it might be cliche, but buy low, sell high. Also, in something like psychedelics,
let me write that down.
in something like psychedelics, I can't stress enough. This is going to be extremely volatile stuff. It's a new industry, just getting off the ground. We looked closely at building this fund, even what our investable universe is, because I didn't want to put a bunch of filler junk in here. I want to have pure psychedelics, real psychedelic companies, completely. And it's a small, limited universe, and a limited universe of exchange-listed, sizable liquid stocks. So very new, very young. I think it's a beautiful time to get into something early, as long as investors are going to have a long-term focus. Now, the other thing is, we really consider ourselves the first true or pure psychedelics-focused ETF in the United States. We've had eyeballs on a competitor on the Canadian side of the border, and that's great. Yeah. And it's raised some assets. Somebody else launched a fund in the United States. Well, if you look at its top 10 holdings, it holds Aurora Cannabis from Canada. Not a true psychedelics fund in our opinion at all. We want to be a pure fund. And once again, limited universe of stocks, but great time to invest for the long term. People willing to accept some volatility.
So did you take some of the methodology when creating the MSOS ETF, which was introduced last September, where you got really the investments that people were focused on the most in the cannabis sector, and you left maybe some of that quote-unquote filler out, or some of the smaller companies that are not quite as focused, like Aurora, as you mentioned, with the competitor ETF. So did you try to concentrate it and structure it the way you did with MSOs, which proved out to be a very successful recipe?
Similar, we think. Now, I hate to talk about cannabis too much here, but yeah, I don't think...
Hey, feel free. We're cannabis lovers too.
Lawn fertilizer companies belong in your cannabis fund. I don't think alcohol and tobacco companies belong in your cannabis fund. Yeah, some of those alcohol and tobacco companies have made investments into cannabis. Well, they're still a tobacco company. I want to own the acquiree, not the acquirer in that aspect. So we believe in a pure investment, first of all. Mm-hmm. Also, our cannabis investment, MSOs, it invests directly in some stocks that are listed on NASDAQ, listed on the NYSE, even listed on the Toronto. But then we use a concept that people really need to understand. We've utilized total return swaps. We hold $1 of cash as collateral for our $1 of total return swap. But it gives us access to the returns of a lot of equities that otherwise wouldn't be allowed by our federal custody bank and by our legal opinion that the SEC asked us to get for the fund, by the New York Stock Exchange listing standards. All these things we did very properly, legally, with a lot of communication with all these vendors. So our fund MSOS holds total return swaps to get access to a lot of the U.S. cannabis companies. Now back to psychedelics. There's more and more psychedelics companies that are getting listed on NASDAQ or even the New York Stock Exchange. There's a couple on the Toronto Exchange. So we're holding those directly. The psychedelics fund, most of the top 10 holdings, you're going to see direct equity investments in exchange-listed equities. Simple as that. But we also have some total return swaps because we want access to some of these psychedelics companies that are listed on secondary exchanges in the U.S. in Canada, excuse me, or traded OTC in the U.S. That's why we do that.
Well, I look at this list. Some notable names included in the ETF include obviously the likes of Cybin, MindMed, Numinous, Atai, and Compass Pathways. We also noticed some allocations for companies like Small Pharma, Mindset Pharma, and Revive Therapeutics. So with all the companies to choose from, why did you choose those companies and why did they make the grade?
They were psychedelics companies and they're available. So once again, I have a very limited universe, and I'll readily say the list of holdings that you're looking at right now, it's not done being filled out yet. There's going to be other names added to the portfolio. At the time we're making this recording, the fund just started trading a day ago. So we're building out the portfolio. I'm going to be very selective in how we weight things. There's going to be companies that we don't include possibly. And I think the universe of psychedelics companies is going to continue to grow and grow fairly rapidly. One company we've added recently via total return swap, well, they're already applying to NASDAQ to get listed on NASDAQ. We'll hold it on NASDAQ as soon as it's available there. So we do look to liquidity, size, trading volume. But then, like any actively managed fund, I'm big on fundamentals. Now, it might sound a little bit funny talking about fundamentals when you're talking about a very new industry like psychedelics, but it is a balance sheet. It's revenue growth. But for companies in biotech and pharmaceutical, it's very often talking about their actual pipeline and future revenue prospects if they're not currently profitable because they have drugs in clinical trials, of course.
Yeah. Well, before we let you go, I wanted to quickly turn to the cannabis industry and the ETF MSOS. Brand brought it up earlier. It's been a rough few months, to say the least, yet businesses are thriving more than ever, and investors continue to remain bullish on its long-term outlook. So from a fund manager point of view, help me understand. You care more about the direction of the price action, or are you more concerned about maintaining the proper allocations and minimizing risk?
I'm concerned with looking at a company's, like I said earlier, fundamentals. Their balance sheet, their revenue, their profitability or path to profitability. And when we're talking about U.S. cannabis companies, which is what we hold in MSOS, they're knocking out of the park. There's a very obvious big disconnect in the last 6-7 months between fundamental stock or company performance and the technical stock performance. They're lagging. They're underperforming. I never worry about my personal track record because I can look at last year and what we did with our fund YOLO and other things. U.S. cannabis companies are beaten down. They're underperforming. That's led to our fund MSOS underperforming. And it's going to change at some point. I don't give predictions of when. We've always said it'd be volatile. We all said it should be long term. But yeah, these companies are performing really well. Revenue growth is fantastic. Stock price not reflecting it. They're turning into pretty undervalued buys in my mind. At some point, that's really going to be noticed. They don't have huge floats. There's a lot of short interest. There could be a bounce back and a pretty serious bounce back at some point.
Yeah, I believe that'll happen too. Dan Ahrens from AdvisorShares. Appreciate your time.
Thank you.
All right, that wraps it up for the psychedelic side. Now let's focus on the cannabis industry. After starting the week making fresh year-to-date lows, the market made a strong rebound midweek from oversold levels. The catalyst appears to obviously be the addition of what's called the Safe Banking Amendment to the National Defense Authorization Act. So, sounds interesting. It's a series of federal laws specifying the annual budget for the Department of Defense. So, Ben, maybe touch on just the overall idea. I know a lot of cannabis investors may be aware of what's going on here, but explain a little bit what this is and what it means.
Yeah, basically it's an amendment for the Safe Banking Act to be included in part of this bill for the National Defense Authorization Act, which is really an act that designates where spending is going to be in the different departments in the defense, U.S. Department of Defense, including the military, the Army, the Navy, that kind of thing, right? And then they have an appropriations bill along with that actually releases the funds. So some people wanted to get this on, and they attached it as something that's not really shouldn't really be part of that bill in normal times. But as we know in American politics,
why is that?
Well, I mean, it's just like I said. I mean, it's a defense authorization bill, right? So it's really meant to be to appropriate where the spending is going to go in the U.S. Department of Defense, right? So somebody's attaching the bill to try to get it through the back door, if you want to call it. And in the American political system, you see that happen a lot of the times, right? When they try to get their fiscal budget and things like that, and then different bills get introduced into those things that have nothing to do with the actual budget, right? So, so whether it's back door or front door, it doesn't matter at this point. The main takeaway is that the Safe Banking Act, if it's adopted, if it doesn't get stripped out, safe banking could be, introduced in a lot shorter time than people think.
How realistic do you think something like that could happen? Clearly, the investor base isn't getting their hopes up too high, but just because it's investor fatigue right now with this industry.
Yeah, it's kind of hard to say, right? I mean, it could get stripped out. It may not make the final cut. It's really hard to say. The good news from a investment perspective is we should know sometime next week or early next week, apparently, whether it's going to be included or not, right? So that's why you saw MSOs bounce. Have the strong bounce from the bottom, touching almost into the 28s. About 29.12 was the low, and then bounced all the way up to 31.50 on news of this possibility, and that really, really catalyzed the market. And it's sort of in line to what we talked about on the last Time Ahead podcast, where the three scenarios where things could bounce. Number 3 was news coming out of left field that no one saw. And I can categorically say that no one saw that this bill, that this amendment would be attached to this to the NDAA, right? So everybody was kind of caught flat-footed when that news came out. And people realized that safe banking could actually, possibly get adopted more, sooner than everybody thought. Then that really sparked the rally in the market.
That is going to be the outcome of this industry. Everybody's going to get caught flat-footed and not know what to expect. But, we've had a few people that we spoke to this week that keep saying we're in the first inning of this industry. People will get caught flat-footed if they're not getting in right now. And pure fundamentals, that's the number one concern right now with, companies like, we spoke, as we said in our interview earlier with Dan, talking about fundamentals. These companies obviously are proving to be purely fundamentally sound. So it's just a matter of time, obviously, as we've said before, but it's interesting to see how things will come to fruition here in Q4. Yeah.
And Dan touched up on that in the interview as well, that, he allocates positions in MSOs based on largely fundamentals, right?
Yeah.
Which companies are going to generate cash flow over time, which companies are experiencing really strong growth, and that's going to translate to the income statement, the balance sheet. They're taking, if you take a long-term view like Dan does, like a lot of investors do, I think we're going to be good, right? It's just all about price point at this point. It's all about how the fundamentals haven't changed. They're still strong, but they're just getting usurped in the short term from the focus on legislation and maybe not coming as soon as everybody thought. So, this has the potential to maybe turn the tide if we can get this through early next week. So it's going to be, something to watch for sure. Yeah. Well, that's that time of the day, or I should say the podcast. Picks of the week, as we talk a little bit about this, there could be some light on the, within the horizon within this industry. So first off, who's your first pick of the week? Well, I mean, that's a tough one in this sector, of course, in both psychedelics and cannabis at the moment. But I'm going to go with MSOs. I mean, there's a risk-reward play here. Obviously, it all depends on whether the safe banking gets included in the final NDAA legislation, right? So if it doesn't, it's probably not going to be a winner this week. But if it does, I think you can see more upside. So something to watch. If you're sort of a gambling person, you might, stake a position early in the week and kind of hope. So maybe MSOs on a risk-reward basis.
Well, I'm taking a page out of yours. I like Revive Therapeutics. Why? I know they like to be branched in, like they were included in, obviously, the new Advisor ETF as a psychedelic company, but very much, as we know, the basilamine play is all about infectious disease and AKA pharma. And I'm still watching that closely to see how that all comes to fruition. But I really like the idea, if there is promising information, that this thing, when I look at some of the companies that are in a phase 3 right now and doing comparables of like phase 3 clinical trials, the valuation of these companies, Revive to me is still grossly undervalued. And I think if we have some promising results, which so far they've met all requirements, this thing could really take off. So that's my first pick.
You know what? It's kind of funny the way the market's looking at it right now. I mean, the non-diluted market cap is sitting somewhere around 115 million Canadian, something, or 100 million US, something like that, or a little bit over. But if you actually look at the percentage of the statistical percentage of phase 3 drugs in infectious disease going to the finish line, it's somewhere around 64%. And that's not including, drugs that that what their safety profile is off the bat, right? So we can infer based on history that, it has a high percentage of actually getting to the finish line, right? So the market is just discounting all this. And I don't know if it's because of COVID, if it's a special case, maybe in reality, it doesn't have that higher percentage, but, historically the numbers look pretty good that it can go all the way. So, maybe at one point the market will clue in, but who knows?
I look at right now what's going on, what's the divide about vaccine people versus anti-vaxxers. And, if there's an alternative, I think that would answer, obviously, a lot of questions. But, I can't get into political talk and what's right and what's wrong. I'm not going to judge people. But, at the end of the day, it's just there's going to be a lot of COVID cases that are going to come to fruition here in the next 60 days for sure. So I like them. What's your second pick?
Well, second pick, I'm going to stick with Compass Pathways. I on dips. That was my one caveat last week, and it's down a little bit this week after 4 straight weekly closing positive sessions. So I'm going to stick with that because every week that goes by is another week that phase 2B results. It's another week closer that they will be released, and I am expecting good results. I do think that they will be statistically significant. Yep. So if you look. We're only about maybe 8 or 10 weeks away from that, maybe less. So I'm sticking with buy Compass on dips. Yeah,
I'm hooking on to your decision. I'm not saying Compass, but my pick from last week, Atai Life Sciences, with their 19% stake in Compass. So I know things are stale, and I know people are a little frustrated right now with things not moving much, but I think this will be a very promising industry, to say the least. 2 months from now, when we're in the middle of November, I think there'll be a lot of things going on, which I think will get a lot more people as far as volume and investors within the space that goes to the next level. That's my true sentiment about where this is going.
I think so. And just 2 quick things for investors who are maybe downtrodden on the psychedelic action right now. You got to remember 2 things. First, that's an early stage growth industry. So you have protracted periods where a price sort of drags out or it goes down, and it gets people in a frenzy, right? Because it looks like the bottom will never stop. But in reality, it will, right? Once you get that catalyzing news, then things can take off very, very fast. Yep. And I believe that Compass Phase 2 results have the potential to do that, right? So hang in there. I know it's a little bit it's a little tough for investors to see price action continuously dripping lower, but that's the way these industries work, especially biotech, which is inherently like that, where 95% of the time nothing happens or it drips down, and then you have periods of excitement.
Yeah. All right. Thank you for checking in this week, and we'll follow up with you next week.
All right. Thanks, Shaz. Thanks for having me.
Thanks, Ben.
Hey, if you want to learn more about the companies that we like, make sure to go to thedalesreport.com. And also, don't forget to subscribe to our YouTube channel by clicking here, and also follow us on Twitter @The Dales Report.